Welcome to RJ Explain Money. Tuesday session was all about the resilience. Despite the global headwind, Indian market bounced back from the deep intraday lows. The Sensex slipped to 81,777 and the Nifty to 25,085 early in the day, but both recovered smartly, closing near their high, only marginally in red. And now let's dive into the positive news and the negative news. On the positive news, we have the auto sector, banking sector and the metal, where on the auto sector lead the charge. The auto pack was Tuesday's star performer. The Nifty auto pack index gained 0.61%, hitting a record high on the festive demand and the GST 2.0 benefits. The Maruti Suzuki gained by 1.81%, whereas it reported 80,000 enquiries and 30,000 deliveries on the day one of Navratri, the best start in 35 years. Since its September 18 price cut, the booking has surged by 50% above the normal, driving the stock to the lifetime high of 16,103 rupees. The Hyundai motor nearly up by 5% in the intraday and it closed at 2.84%, posted its best single dealer billing in 5 years with the 11,000 vehicle build. And Mahindra also up by 0.70% and the Eicher Motor up by 1.40% and the Hero MotoCorp is up by 0.16%. Also rode the festive way. Clearly, autos are powering ahead with the consumption momentum. Banking sector provides a crucial support. Banking added a backbone to the market. PSU Bank led the charge with the Nifty PSU Bank index up by 1.09%. And on the banking sector, following were the stocks which got highly benefited. And the first one is the IndusInd Bank up by 2.82%, emerged as a top gainer of the session, backed by the strong institutional buying. And on the second, Axis Bank is up by 2.28%, got a boost after HSBC reiterated a buy rating for it and raised its target price to 1,340 rupees. And third, the State Bank of India up by 0.89% and it added 12 points to the Nifty gains, reflecting a improving sentiment in the PSU banks. This shows that bank remains a steady pillar, especially in the volatile condition. Next, the metal also extended the rally today. The metal too shines bright. The Nifty metal index advanced by 1%, supported by the hope of infrastructure spending. The JSW Steel up by 2.43%. It lead the metal pack, while other steel names also edged higher. And on the negative news, we have the IT, FMCG and the real estate and construction weakness. Whereas on the IT cracks under the Visa fish. On the flip side, the IT stock tracked. The Nifty IT index dropped by 0.63%, extending a Monday's 3% crash after the US announcement of $100,000 H-1B visa fee. And on this, the stock which got affected or the top is the Tech Mahindra, which is down by 2.21%, was hit hardest, extending its steep losses from Monday. Infosys down by 0.52%, showed some resilience but stayed weak. TCS is also down by 0.40%, continued its slide as H1B dependency fear lingered. Now I will just explain why this created a shock. Just for your perspective, filling 5,000 H1B visa will now cost around 4,200 crore, up from just 13 crores earlier. And to fix it, companies may pivot faster towards the offshore model and the local US hiring, but near-term sentiment remains shaky. Next, we will look into the FMCG. FMCG sees a broad-based selling. FMCG was the highest loser. Nifty FMCG index fell by 1.29%, its sharpest drop in weeks, as profit booking took hold. And the stock which got impacted highly on this are Hindustan Unilever, which is down by 1.64%, was the biggest drag, cutting 9 points from the indexes. Next is a Nestle India, which is down by 1.72%, extended the recent weakness. And the ITC is also slipped by 0.89%, despite usually it acts as a defensive name. Next, on the negative news, we have the real estate and the construction weakness. The Nifty Realty Index declined by 0.89%. Cement and infra names struggled, whereas Ultratech Cement down by 1.78%, lead the pack lower on the demand concern. Next, we will quickly look into the currency and the commodity. Whereas on the currency, rupee weakened by 0.53% to 88.77 per dollar, nearly all-time low. Gold surged to 2.27% as a safe haven demand soared. Next, we will look into the global market. First, we will check on the US market, where in the US market, S&P 500 up by 0.04%, Nasdaq up by 0.70%, and Dow Jones mildly higher by 0.14%. The main reason is the tech strength and the Fed optimism kept the Wall Street positive. And on the Asian market, Nike is up by 0.99% on the yen weakness, while the Hang Seng fell by 0.70%. And on the Europe, we have the FTSE, which is up by 0.39%, and the DAX is also up by 0.65%, showing a steady recovery. Next, we will look into the key catalysts that are ahead. The market now awaits the RBI policy decision in next 1 to 3 days. A 25 BPS rate cut looks likely, with the inflation tracking below 2% and the growth at 6.5%. That could be a big catalyst for the bank, auto, and the realty sector. As part of a summary, I will first let you know the 3 key takeaway and the risk to watch. First, we will look into the 3 key takeaway. On the key takeaways, we have the auto festive boom, IT pain continues, and the market resilience. First, we will check on the auto festive boom. Maruti, Hyundai, and it rally on the record Navratri booking. And next on the takeaway, we will look into the IT pain continues. On IT sector, the H1B visa shock track all the tech sector down. Whereas the Tech Mahindra is the top loser of 2.21% and all its peer is also down, including TCS, Infosys. Next on the takeaway, we have the market resilience. Despite IT and FMCG weakness, Sensex and Nifty recovered from the sharp intraday lows. Next, we will look into the risk to watch. Rupees at a record low may raise the input cost, and second risk is a global policy risk could trigger a volatility, and third is a sector rotations, where the sector rotation shows a leadership shifting away from FMCG and IT towards the auto, metals, and banking sector. At last, I like to summarize this video as it's a classic case of India's domestic growth story balancing the global shock. Auto proved festive demand is strong, bank held steady, metal rallied while IT and FMCG dragged. With the RBI policy on horizon, the next move could set the tone for Q4. That's it for the today's market. If you found this briefing helpful, smash that like button, share it with a fellow investor, and don't forget to subscribe. I'm always open to the feedback. Please provide your valuable feedback in the comments. Thank you.